I just built one of the most powerful dividend analyzer tools out there, and I was able to do it with the power of ticker data. And ticker data is a spreadsheet integration tool that automatically allows you to pull stock data straight into your spreadsheet. So for example, you can see we have Microsoft stock listed right here. But let's say I want to look at Domino's pizza stock. I can plug in DPZ right here and hit enter. And you can see all this data is going to automatically load in. If we go here to extensions on Google Sheets, here you can see the ticker data add-on where you can log in and refresh the data as well. But with the use of this tool, I can automatically pull in all this information to automatically break down any dividend stock that I'd like to see simply by plugging in the stock ticker, and I can look at stocks from over 70 plus stock exchanges all across the world. So let's go ahead and look at this dividend breakdown spreadsheet that I've just built out. Now Domino's Pizza is a great example for this spreadsheet because if you didn't hear the news, just a few days ago, this company announced that they're going to be increasing their dividend payouts by 24.8%. So that is a massive increase in the amount they pay out in dividends. So let's go ahead and use this dividend breakdown tool to start analyzing the dividend payouts from Domino's Pizza. Now right here, obviously we can see the price of Domino's sitting at $447.23. We can see the company's starting dividend yield sitting at 1.35%. And we can see after that dividend increase, their dividend payout is now sitting at $6.04 per share. Again, so price of $447 and dividend payout of $6.04, that gives them a starting dividend yield of 1.35%. So yes, this is a lower yielding company, but there's a lot more you need to understand about them from a dividend perspective that personally makes me like them from a dividend perspective. Let's go ahead and look at those payout ratios. We can see the payout ratio for the company sitting at 32.7% and the free cash flow payout ratio sitting at around 34.97%. Now, if you know anything about me, you know personally I like to look at the free cash flow payout ratio. That's because dividends are paid out of free cash flow. So this means 35% of the company's free cash flow is currently being used to pay out dividends. Now, if we come down here, we can see our yearly dividend payout chart. And this one is an absolute thing of beauty. You can see phenomenal growth over the past 10 years. In 2013, we can see Domino's was paying out at around 80 cents per share. And jump forward to 2023, it's $4.84 per share. But with the recent dividend hike pushing their dividend payout to $6.04, once we decide to reflect that in our chart, that means their dividend payout is going to be all the way literally off the chart, somewhere up here. So the dividend growth from this company has been absolutely phenomenal, and you can see what it's been like year over year. Now, speaking of dividend growth, you can see this chart also shows us our 5-year dividend growth CAGR and our 10-year dividend growth CAGR. So for example, the 10-year dividend growth compounded annual growth rate for this company is sitting at almost 20%. That's absolutely insane. That is massive dividend growth during that time period. So for example, let's say the average inflation rate during that time is around 2 or 3%. If you had invested into Domino's Pizza during that time, your dividend increases would way outpace the rate of inflation, meaning you're getting more purchasing power every single year. And the 5-year dividend growth rate is phenomenal as well, sitting at 18.36. So this company has been a compounding machine when it comes to their dividend. Are the 10-year free cash flow CAGR and the 5-year free cash flow CAGR. When I look at investment research platforms, this is something that I find very hard to find. Most research platforms don't show this, but this is definitely something that I personally want to see. And let me explain why. Like I mentioned earlier, dividends are paid out of free cash flow. So for a company to have sustainable dividend growth rates, they have to grow their free cash flow at a very healthy rate as well. So for example, if I saw a company with maybe 10% dividend growth, but only around 2% free cash flow growth, I would know that dividend growth rate is not sustainable moving forward. But when I see nice levels of free cash flow growth, I can feel confident the company is going to be able to continue to increase their dividend payouts over a long period of time. And I take the company's free cash flow very seriously. We can see free cash flow is reflected in both of these charts in some way. The first chart we have here is our free cash flow payout ratio over time. Again, I already touched on what this is. Dividends are paid out of free cash flow. So how much of the free cash flow is being used to pay out dividends over the past decade? And we can see in this scenario with Domino's Pizza, for the most part, it's typically been in the range of around 20 to 40% pretty consistently for the past decade, which is considered a very healthy range. I like to see the consistency, and I like the fact that it's not trending upwards despite the dividend payouts increasing rapidly. And then the last chart we have down here is our free cash flow versus dividend paid. This is something that's listed right here. And basically what we're doing is we're comparing how much free cash flow the company is generating compared to how much they're paying out in dividends. So it's somewhat similar to the free cash flow payout ratio over time. But again, we can see the blue is going to show us our free cash flow growth and the red is going to show us our dividend growth. Now the dividend growth is obviously very sustainable. That's something that's easy for the company to control. Now the free cash flow growth, while it has grown tremendously, is a little bit more choppy. We have a few years where it doesn't grow quite as fast, a fast spike up, and then a little bit of a decline over the past couple of years. But again, overall, we can see phenomenal free cash flow growth, which is reflected in the 10-year free cash flow CAGR and the 5-year free cash flow CAGR. And then of course, if you're interested in breaking this down more, we can look at all the individual metrics right here. We have our free cash flow, we have the total amount of dividends paid out by the company, we have our free cash flow payout ratios, our yearly dividend payouts, and then the payout ratio as a result of earnings is listed right here. So again, basically all the metrics I could ever want to see as a dividend investor all in one spreadsheet. I've yet to find any other investment research platform that can show all these metrics all in one place like I'd personally like to see. And what's really cool about this spreadsheet as well is if we jump over to the next tab, the dividend discount model, I'll go ahead and zoom in a little bit, but this valuation is basically completely automated as well. All we need to do is plug in our growth rate projection and our discount rate to get our dividend discount model price per share. Because if you look here, again, you can see using the ticker data function, we can automatically pull in the yearly dividend payouts for this company. So for example, we can see in 2020 with the ticker data function, the company was paying out $3.12 compared to now sitting at $6.04. So now we can see those year-over-year dividend growth rates. And again, it is an absolute thing of beauty for this company. So let's say moving forward after doing some research, I think the company will increase dividends at a rate of 7% moving forward with a discount rate of 8.5%. This would give us a dividend discount model price per share of $430.85, which we can see is only a difference of around 3.6% from the current trading price for this company. So moving forward, you'll definitely see me using this spreadsheet quite a bit more, but just like my investments, I plan to compound the quality of ticker data over time and the quality of the spreadsheets on ticker data. And like always, if you'd like to get access to a library of spreadsheets built by Ticker Data and built by me, then you can head over to Ticker Data and join Ticker Data Premium, and you can get access to lots of different spreadsheets that I've been building over the years. And you'll also get access to future spreadsheets that I release on here as well. So go ahead and let me know in the comments down below what you think of this spreadsheet. Again, if you'd like to get access to Ticker Data and any of my spreadsheets, you can head over to tickerdata.com. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.